founder market fit. And that's just something like VCs especially talk about all the time. But the way he viewed it was actually predestination. Like he thinks that the best entrepreneurs are the ones who, when they go out and build the company, it feels like they are fulfilling a destiny. They are building the company that they are destined to build and that nobody else could build it. It's really just trying to understand the ethos, right, of the founder. It's not just their desire, but the credibility they have built up until that point.
Well, Christine, welcome to Venture Grounds.
Thank you.
Nice to see you again.
Yes.
It's been a long time.
Less than 12 hours ago.
Incredible.
We're still digesting from our dinner last night.
Literally. Why don't you tell us a little bit of background on yourself and then more about J2?
Thanks, Jason. This is so fun. What a way to start the year. So I'll start with myself. My name is Christine Keung. I'm a general partner at J2 Ventures. And my background is a mix of government, but also early stage, high growth operating roles. I was an early employee at Dropbox and Figma, was with these companies from Series A/B until IPO, at least in the case of Dropbox, and Figma, that one took a little bit longer. And I was always in either a business operations or technical roles or in a chief of staff capacity. And so that was just honestly an incredible way to start my career in Silicon Valley because I had a front row seat in seeing some of the fastest growing consumer software companies scale. Yeah, it was incredible. And I never thought that would be relevant to my career in government. I also just didn't actually have any plans to have a career in government. I went out to Harvard Business School in 2018 to get my MBA. That's actually where I met J2's co-founder, Alex. He was my seatmate in class, and he and I graduated into 2020. So we were the class of 2020 at HBS, so no graduation. We basically got kicked off of campus by March. And that was just, that was a huge kind of shifting point for the world, right? And
totally, a wild time.
Wild time. I think and at least at that point, it's like whatever kind of post-grad plans I had. At that point, I was considering either going to a hedge fund or going back to Silicon Valley. I kind of just put a pause to it because what really mattered most to me at the time was the fact that my family, my hometown in Los Angeles was really, really struggling due to the pandemic. I'm the daughter of small business owners. I grew up working in my parents' restaurant. And I'm like all my aunts and uncles, they're all small business entrepreneurs. I come from kind of a startup family. And if you remember what was happening March of 2020, businesses.
So many businesses shut down, so many restaurants, especially in LA.
And small businesses are one of the largest employers in our country. And so people were losing their jobs. And so when I had an opportunity to work for the Trump administration, I took it. And so I became a political appointee with Trump White House. First week of April. It was also the week of my birthday. They shipped a...
Best month for birthdays.
Yes, what a way to celebrate my birthday. They shipped my government laptop to the campus mailroom, and I was part of the first group of civil servants that got onboarded and sworn in on a Microsoft Teams call. And that was the start of my public service career. So I joined the SBA, the Small Business Administration, to help them launch the $800 billion Paycheck Protection Program.
Yep. Oh, I remember that.
Yeah, that was
we were doing a ton of PPP stuff at the time too. It was wild.
Well, thank you for your service. Because that was definitely an exercise in scale. The first tranche didn't reach small businesses. It didn't reach my family, it didn't reach any of the small businesses that I knew, and that was because we relied very heavily on traditional brick and mortar banks. Mm-hmm. This isn't, the banks, it's not, the banks were trying their best. It's just the SBA lent more money in the first 30 days of the pandemic than the previous 30 years. Just to give you the sense of demand they were getting and the need to scale.
All the systems broke. Yeah.
All the systems broke, and they weren't ready to actually support small loan amounts. And so, I think one of the reasons why a lot of that high growth operating experience came in handy in government was during the pandemic, government just became the largest platform for service delivery. Like the need for government services have never been higher, and there was just no alternative. There really wasn't an alternative if you wanted a vaccine. There was an alternative if you wanted if you wanted a hotspot, right, to make sure your kids could dial in for school, and there was no other alternative for a paycheck protection program. And so what made the biggest difference, at least when I was at the SBA, was by the second tranche, we started working with the fintechs. And we gave a blanket government contract to all of the fintechs, even the smaller ones, especially the smaller ones that were designed to serve minority-owned small businesses. We all gave them we gave them the right to start processing PPP loans, and overnight they became SBA lenders. And the majority of that $800 billion to this day still processed by the fintechs.
Flow through those. That's incredible.
So that was just a turning moment for me, because I've always cared about public service. I've always I just thought for a long time, I didn't think I had skills that would be relevant in government, because I wasn't really a policy. I wasn't really a policy person. I was a data scientist. Yeah. But I think my 2.5 years in government, right? So after I wrapped up my time at the SBA after Trump left office in November, and then I moved back home to California to go serve Silicon Valley. I served the city of San Jose as chief data officer. I just didn't think that for 2.5 years I would get to use some of the skills I developed from Silicon Valley to programs and issues that I've been both a beneficiary of, and just things that and honestly just working on issues that I deeply, deeply care about. Yeah. So that was really fun. And J2 really is a continuation of that. It's really about keeping the United States competitive, making sure we're maintaining and growing capacity within the government, and honestly just backing companies that can win in large commercial markets, but helping them expand the scope of their business into government and into defense.
Tell us more about the J2 thesis, dive a little bit deeper.
Yeah, so we are an early stage dual use technology investor. So dual use is exactly how I just described it, right? So backing companies that can serve both commercial and government applications. Our portfolio is split pretty evenly across telecommunications, healthcare, cybersecurity, and advanced computing. And the reason why we focus on these 4 industries is because these are actually markets where having government adoption signals credibility and it signals product maturity, right? These are all markets where governments tend to be the largest and most enduring buyers. Mm-hmm. It's actually if you're a cybersecurity company, it's actually a really good thing. Right,
of course, to be working with the government. Yeah.
Exactly. So, so that's how we think about thematically, where we the founders that we want to work with, and we also help companies access non-dilutive capital from the government as well as revenue.
Yeah, you guys navigate that really well.
Thank you.
I've seen it. Doubling down on that, Brookhaven is one of the largest early stage funds dedicated to dual use tech. What changed in the world that made now the right moment to scale the strategy to $250 million? And what do most investors misunderstand about dual use as a venture category?
So thanks for bringing up Brookhaven. I think for a long time, Jason, you knew it was in progress for a while. Yeah. And so I'm happy to share, because everything's now public. We're officially so we manage now around $700 million. Brookhaven was a $250 million fund that we're excited to start deploying this year.
So cool.
And I would say the biggest shift with dual use is, a lot of it's actually, it's historic as well. I think the perception around working with defense has changed a lot over the last 10 years.
God. Yeah.
I was in Silicon Valley when there was the Google walkout, when it was,
wow.
I think when employees, so I've kind of seen, in some ways it's like the Silicon Valley is sometimes, people think it's a bubble, but there's sort of even the Valley has kind of experienced the culture shift, right? I think the pandemic, and the reality is, I think, just the active war, right, going on in the Middle East, in Eastern Europe, and even actually starting this year, right, with what happened with Venezuela, right, has really kind of shifted, I think, how citizens and how entrepreneurs think about the role of government, right, in society. And so I remember over 10 years ago, this was 2016, 2017, Google employees actually walked out when they found out that Google has a defense contract. And it blows my mind that 10 years later, defense tech is one of the hottest investment assets. Andreessen just raised $15 billion.
It's incredible. The entrepreneur, patriotism is alive and well. We've seen it with El Segundo and having our office there and meeting the companies. It's really kind of an incredible time right now to be in this space.
To be in the space, and I really do give, I think COVID really was that wake-up call, because I think for a long time, I would say at least prior to COVID, I actually think a lot of VCs made money on funding government alternatives. Uber's a great example, right?
Got it,
Where
yeah.
I think Travis Kalanick was frustrated with San Francisco public transportation and basically funded an alternative, right? Like so many companies were actually formed to compete with the government, and post-COVID, right? And I think with the new wave of venture capital financing, including ours, it's really around working with the government and building that capacity. I would
Helping
say
it move 10 times faster.
helping them move 10 times faster, and I think now people understand why that matters.
Yeah.
Because I would say it's hard to really understand that until you have kind of a moment like 2020.
Yeah.
I would say one of the biggest shifts with dual use investing, though, is where the talent and where the sourcing happens, right? So during the Cold War, I mean, honestly, the DoD, one could argue, was like one of the best venture incubators of all time, right? Everything that we use, from like GPS to the internet to even the backpack, was all incubated for military purposes.
Backpack, yeah,
the
okay.
backpack,
Yeah, of course.
yeah, because like before that, I mean, I guess everyone would just use briefcases and purses.
Yeah.
And so there was a
hadn't thought
time.
about
Yeah, it's that, and there's a really fun book called it's called The Code. It's a history book on Silicon Valley by Margaret O'Mara, who is a UW historian. We've actually invited her to speak to our LPs. She's written a really great book that lists all the companies that were
Came out of the DoD.
that came out of the DoD.
I got to check that out.
It's incredible.
That
I mean,
sounds super cool.
semiconductors as well. So but for a long time, especially during the Cold War, right? Like DARPA, the DoD, they were just magnets for talent. Like, I mean, the smartest people in the world came and they wanted to work for the US Department of Defense. And that was where the innovation came from. That's not the case anymore. And that's kind of where the dual use, dual use as a definition has stayed the same, but I would say for us, we have a stronger orientation on the commercial because we now think the private sector is the best incubator for defense technologies. And you're seeing that reflected even amongst even within DoD procurement strategies, right? Like over the last 15 or so years, the DoD has actually changed their own buying guidelines to work with younger companies. And that's why you're seeing venture-backed companies like Scale AI, SpaceX actually become defense primes in less than 10 years. Like, you're starting to see the Department of Defense honestly disintermediate the primes, right? And basically working directly with smaller companies to access capabilities that they don't have.
Yeah, I mean, I remember we were in LA Tech Week, the panel that you put together, and just kind of talking about all of that and bringing technologies to the warfighters much faster and like how to navigate that. I think you guys do a great job of like helping people with that maze and that web.
Thanks, Jason. Yeah, I do love the fact that that company, I mean, we're pre-seed and seed investors. I love the fact that I think a lot of the companies that you've met from our ecosystem, right, they are, like, you're meeting them on kind of year 1, year 2, definitely less than year 5 of building their companies. And I think what has always surprised, I think, our partners in the space is how much traction they've already gotten from the DoD. I think for a long time, people have always thought selling to government is sort of a late stage plan. Post-IPO, you hire some former congressmen and they'll build out your federal strategy. But for dual use and deep tech companies, I think they're realizing that having the government as an early partner,
Start early.
It's game changing.
Yeah, thank you. What has changed about early stage investing in 2026?
Oh my gosh! Well, a lot has changed. And what we're like 2 weeks into the new year. I would say from a macro perspective, and I hopefully, like, this is really exciting for Ro, right? Like, we are at historic levels of venture capital.
It's wild.
It is wild.
The early stage market is gangbusters.
It is gangbusters. I actually pulled some numbers. So let's see if I can remember it correctly. If not, I have ChatGPT. Yeah. But NVCA, I think, published a report saying that we are at $1.2 trillion of venture capital of AUM, right, for venture capital. So $1.2 million currently being managed to go and invest in companies. I think I was looking at some Crunchbase numbers, and I think, what was it, $450 billion allocated into venture capital even last year, and over half of that was US startups. So, at the macro level, there has just never been so much venture capital, period, right? And I think what we're now seeing on the ground is more and more founders kind of responding to those market dynamics.
The time is now to go do it.
The time is now to go do it.
You want to go do something, you can do it.
Yes, and like the U.S. is becoming startup nation, right? I know somebody's working on a report that's starting to track the number of small companies that are being formed. Next podcast, we'll go through those numbers. But I did think like one of the more interesting reports was I was looking at like the Bureau of Labor Statistics, and this is the first time in U.S. history where over 1/3 of the labor force are considered like self-employed or fractional employees.
Cool.
1/3, right? And look, they're not all going to be startup entrepreneurs, but you're starting to see this labor shift, right? Where I think certainly I think when you and I were like graduating from college, like we were definitely seeking full-time employment, right? And I mean, I would say our parents' generation, a lot of them were seeking, they were seeking lifetime
Career,
employment.
stable,
That's not happening anymore. People are taking matters into their own hands. So that's been really interesting. And that was just venture capital. I mean, the DoD last year, their budget was like over $850 billion. That's like the highest, nominal DoD budget in history. And so if you combine the $800 billion DoD budget, and the DoD is responsible for 2/3 of the world's spending, and a lot of that isn't just maintaining our military bases, it's actually technology R&D, plus the 1.2 trillion, it is insane the amount of money that is going into venture capital. And then at the micro level, we're seeing this in terms of median round sizes. I think the median Series A round, according to Crunchbase, is now $12 million. And that is about the same as what Series B rounds were 10 years ago.
Wow.
So we're starting to kind of see rounds get bigger and bigger, but I think the cost of building has never been lower.
Correct.
Right? Like, yes, compute costs are high, and I'm glad that VCs are kind of subsidized, or the VCs in public markets are subsidizing credits for all of our companies. Yes. But on the labor front, we're seeing teams of 5, 10, 20 reach tens of millions of dollars. And so you're seeing like larger round sizes, historic amounts of capital, but like a lot of like capital efficiency at the micro levels where I'm seeing companies accomplish more and more with smaller and smaller teams.
Faster to revenue, faster to $1 million in revenue, to 10 million in revenue.
And you see that all the time because you work with startups.
Lightning in a bottle. It's not a very uncommon thing these days. It's actually, it's incredible. So, that's a great one. What made Unit 221B feel inevitable to you, not just impressive? I obviously know a little bit more about this story too, so it's very cool to get to talk to you about it.
That's true. I mean, I'm still thinking about even just like our dinner last night where you got to meet like several of our portfolio founders who are based in New York. I think, with Unit 221B, what's so special about that team is they were kind of the definition of like the if you know team, like just because they've been around for a while, right? Like this is
under
a team
the radar, but only like super popular and premium in like very secretive circles.
Exactly. Like this is the team that most people, and it was intentional. They were in stealth for such a long time, but it's the best security engineers, the best hackers in the world know about this team, but just for a long time they didn't want attribution. This is a team that, the founder, sold his first company to Deloitte, the second company to Flashpoint. They're serial entrepreneurs, and they built Unit 221B without the intention of ever taking venture capital, because he wanted, he and his team, right? They wanted to build one of the largest open source networks of security researchers. And so for 10 years, they basically built trust among some of the best security researchers in the world, the best threat intelligence experts, and they created the largest database of open source dark web chatter. And they did this by infiltrating the criminal chatters on commercial platforms.
So cool. And
it's just so, and I've been familiar with their work for a long time because my first job in Silicon Valley was on the security team at Dropbox. And so they were kind of like the team and the platform that I think a lot of operators in the space would call when we think there's an attack happening. And so for me, it's actually very much like a full circle moment, going from somebody who started her career as an operator to now transitioning investor to be able to invest in this company, to join their board, because what they do is so important, it's so sensitive that we just want to be so thoughtful about who takes ownership of this company and how they affect kind of the culture and trajectory. And if you just Google them now, Jason, they're all over the news, and
super cool.
It's everything from I think Fortune, Wall Street Journal, Bloomberg.
They're starting
60 Minutes. You're right. The HBO documentary Teen Hacker.
They're out there.
Yeah.
What actually drove customer conviction, data operations, or law enforcement integration, and what's realistically replicable?
Yeah, I, this is one where I don't know how much is. Actually, I have one that is probably replicable to companies even outside of cyber. I mean, what is unique is the fact that this is a team that actually works with law enforcement to put bad actors away, right? So this is a team that caught one of the most notorious hacking rings in the world. Which is called Scatter Spider, right? They caught the bad actors behind the Snowflake hack, the MGM hack, the PayPal hack. The list goes on and on. And this is a company where we don't talk about their customers, but these are, they work with over 50 of Fortune 500 customers, and pretty much any service that's vulnerable to any type of cybersecurity attack has them on speed dial. And I would say
the Delta Force of cybersecurity.
They are the Delta Force of cybersecurity. And actually, this one I can share. They do work with the Department of Defense. They work with Cyber Command. That one, that's actually nice about working with the government is you actually can, in some cases, talk about it. And they are mentioned in the press releases now.
That's cool.
The one thing they've done that I thought has always been really special, and this is something that I would say as a board and just as like the operating team that we're very just protective of, is their talent strategy. Because one of the things that kind of make them defensible is the trust that they have within the community. Security researchers are not normal people, and I mean that in the best way possible. It's just not, right? Like, think about the skill set, the orientation of somebody who can hunt bad guys on the internet, right? And when I talk about these bad guys, I'm talking about folks who are leading like sex trafficking rings, right? Folks who are scamming people like online on dating apps, right? Like, these are bad actors who are acting at scale. This is like the team that's actually creating accountability in the system, and they do it in a decentralized and open source way. So they have been able to hire some of the most renowned security researchers in the world, while also maintaining a global community of good actors in the space who are just volunteering their time infiltrating the channels and installing conversation scrapers. That's intentional. Like, that is part of their strategy. That is part of their defensibility. But I would say as a team, right, the CEO, Mei Chen Contino, Chief Research Officer, Allison Nixon, and the CTO, Lance James, they've been very, very thoughtful about creating the type of culture and relationship with that community and making sure and actually, like, one of the reasons why we decided to tell this story was because we wanted them to know that just because they brought on a partner like J2, it's really giving them more means to kind of scale their impact, right? Like, we want them to know that this community is honored, it's protected, and we want to basically take this data and do good with it.
It's incredible.
And you've met the team, so you kind of know
just
how much
they're rock
conviction they
stars,
have.
and May is a force to be reckoned with.
Absolutely.
Before raising venture, what did they do that most security founders won't, and why is that where real trust comes from?
What's really unique about this team and this company was when they first got started about 10 years ago, they were services first, which is unique. That's starting to change now, but I would say most security companies built in the last decade were very product.
We want to raise venture capital. They were not.
Yeah, they raised venture capital off of like an MVP and then they kind of scale and go to larger customers. They kind of did the opposite because they didn't raise venture capital for a long time. I think it honestly took many, many years of courting them to convince them to take some diluted capital because they were so sensitive about who sat on their cap table and who sort of had a say in in sort of the vision that they wanted to create. So they kind of did the opposite where they were very like services and very community first. I think it helps that this is a company that, it's threat intelligence experts building for other threat intelligence experts. They weren't really building for the enterprise CISO, and they weren't trying to productize it early because the problems that they're solving around cybercrime is so complex. Like, there's not, it's hard to MVP what they do.
Yeah, it's not like a one size fits all.
No, and it's, Jason, some of these numbers are confident. Like, you and I confidentially have talked about the scale of the data that they have. It is the largest database. Like, there's no, that's a decade of curating a community that has chosen to essentially create a record of the dark web as a means of accountability. How do you MVP that? You don't, actually. So the only way you could do it is in part actually embedding yourself in the community and actually maintaining it for years and just proving yourself over and over again. I think what really excites me, though, as as their investor and as their partner in the space, is that is starting to shift.
Yeah.
So they have done actually the hard work. They've built the community, they've built the trust, and they've built the data. And now they're shifting into a product first company.
Commercializing this product.
Commercializing the product.
Others.
Yeah. And that's really, and their goal of doing that in terms of making it more self-serve, making the insights better, is because they're realizing that there is a limit to what they can do on the services side, and they want to basically scale and up-level the talent they have within the firm. Which we're excited about. I'm so excited to watch them scale that.
I mean, it's going to be incredible to see. Now to the espresso round. What's one view you hold about the market that most investors would disagree with?
So I don't know if it's still too early. I need to stress that. Like I'd be curious to kind of see how many of them would disagree with me. But so I've been thinking a lot about markets, right? Every time I read the Wall Street Journal or I go to a conference, everyone's asking me, like, are we in the middle of a defense tech bubble? Are we in the middle of like an AI bubble? And I can understand why people are afraid of a bubble. I mean, think about the numbers that we just shared, right?
It's a lot of momentum.
There's a lot of momentum. I think the one thing that we need to figure out is, and this is something this is not an espresso round, this is like a flat right way. Sorry about that, Jason, is we need to actually decide if the private markets will be efficient in allocating that capital, right? Like, can we as VCs, right, and even the DoD, like allocate trillions of dollars efficiently, and that's honestly like TBD. Let's see
to venture happens. or defense or all like all of that.
Probably into venture, right? Because it's just thinking about like what would the world look like with $1.2 million of venture capital infused into the economy, right? Like that is why folks are feeling fearful, right? Because it's actually unclear if the private markets can ingest that.
Yeah.
And we are seeing valuations go higher and higher and higher. And so this is more just like, it gives you more sense of like, how am I thinking it? How am I processing it, right? I would say a year ago, I would have just casually said like, we are in a bubble. But at the same time, like I've been so impressed by just like even just performance across like my own portfolio, right? And looking at how fast our companies have been able to move, how much value was generated in such a short time, in part because of, labor gain, like gains due to AI, that I'm starting to feel like despite prices being high, despite historic amounts of capital, the demand has never gone bigger. That the growth in the demand curve can actually meet it, and the micro like capital efficiencies, right, where you're seeing stronger venture-backed businesses built, could actually help us like outrun this bubble. So I'm becoming more of an optimist. But
I'm an optimist too.
Good.
I love it.
But I wasn't like, it took me a little bit of time to get there.
Yeah.
Due to
you
my
kind of got to
founders.
pick your head up.
Yeah.
You see it more than anybody else. What's one conviction you've completely rethought in the past year?
Because I feel like what's interesting is like my mind is always, like as a VC, it's like you're always trying to get like different data points. And I feel like there were certain markets. So there were certain markets that about 1 or 2 years ago, I would say I was bearish about. For all the typical reasons, right? It's market saturation, the demand isn't there. Usually I would say if a VC, including myself, if I say like, oh, the market's not big enough, it's just because I didn't have the imagination for like what that demand can be. And I have to say, like at the start of 2026, like I'm actually revising a lot of it, because I'm realizing that so this is less about like the actual conviction and more like how am I kind of developing as a VC, how am I kind of changing my own process, is I used to spend a lot of time trying to diligence the market, right? This is your typical like, okay, market sizing, you're working off of like historical data and market comps. And one of the things that I'm now doing is I'm trying to do a better job diligencing demand growth.
Got it.
So instead of like looking at what the market used to be, I'm now spending time with the biggest buyers in the space to try to understand their willingness to pay and how much, and actually just asking them, hey, like year over year, like how much what is like, how much more do you actually want to buy?
Yeah.
Right. And because it is actually changing, and I didn't expect that type of volatility. So that's exciting, because I think if you're able to actually understand kind of shifts in consumer sentiment, in commercial demand, that's kind of that is actually probably the best indicator to a growing market.
Yeah.
And so that's sort of a new thing that I'm doing, and that's also something like you and I should just collaborate on.
Yeah, that's
like
cool.
setting up more events that are more buyer focused,
Yeah.
just so we can stay updated on how a market's changing.
I love that. What's one risk most of venture is sleepwalking past right now?
Probably just too high valuations.
Got it.
Yeah. I mean, all of us are still haunted by
Yes.
2021, right? Where and I think a lot of I'd say a lot of founders, not even founders, I think founders and VCs like need to just realize that of course the valuation,
Can they grow into these numbers?
Can they grow into these numbers, right? Like you are taking like a set of, like every time like you take a valuation or you take a set of capital, right? Like you're kind of inheriting like a set of obligations, and you really need to think critically about how that valuation would either help or impede your growth.
Yeah.
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 But we're starting to see
It's
valuations creep up, and that is something I'm a little nervous about.
Rightfully so. Who's a company, founder, or sector you're fascinated by at the moment, and why?
You
Let's pick a different one.
No, and I'll pick someone. I'll pick one out of our that's not in our portfolio.
Oh.
And I actually met him. I met him pretty recently. So I had a chance to meet Edwin Chen, who's the founder of Surge AI.
Okay.
He is he's been kind of building. So Surge AI has been in the news a lot, but he was like, what I really appreciate about Edwin and that company was they were actually building in stealth for a long time, right? Like Surge AI, honestly, most people have never, most people probably haven't heard of him or heard of his company until like the last couple quarters when Forbes basically listed him to put him on their billionaires list. And Surge is a scale competitor, but they creating like high quality data labeling services. And his goal is to make sure that the models that are developed for the future capture as much human context human context and accuracy as possible. So, Scale's is pretty famous for using low cost labor to label data sets at scale. Surge takes the opposite approach, where he actually compensates his data labelers very well, and he sources experts to do it. So he was somebody that I met pretty recently, and was
Super
just
cool.
Yeah, I was just so like impressed by his philosophy towards building. Something that he has said in the past that I think really resonates with me as an investor is he talks a lot about how he thinks that like somebody once, like I think this might have been like the 20 VC podcast. I think Harry Stebbings asked him about like founder market fit. And that's just something like you're going to hear VCs especially talk about all the time. But the way he viewed it was actually predestination. Like he thinks that the best entrepreneurs are the ones who, when they go out and build the company, it feels like they are fulfilling a destiny. They are building the company that they are destined to build, and that nobody else could build it the way they envision.
Yeah.
And it's just such a different way of thinking about entrepreneurship, right? And thinking about impact, but it so deeply resonated with me. And I think until I really kind of heard him frame in that way, I think it helped me better understand. I mean, Unit 221B was a great example, right? Where I'm going to throw away the term founder market fit, because it's really just trying to understand the ethos, right, of the founder. It's not just their desire, but the credibility they have built up until that point to serve their industry.
Yeah.
And so I just really love the way he framed that, and it's kind of energized me all week.
Yeah, I love it. What's a founder red flag that's actually a green flag for you?
I don't think about it as like red flag versus.
You're not outwardly like looking for red flags.
No, not really, because I mean, well, outside of like, I don't want to back. I always try to think about their personality and their track record and kind of just their orientation towards the world in context of what they're trying to do. That's probably like the better way. So it's not so much about flags, right? And the best example is, Jason, we literally had dinner with my founders yesterday. You have met, think about the diversity of the founders there, right?
Totally.
In every context,
Yeah.
right? Like not just like in
Government,
context.
consumer, security.
And their personalities are so different.
Yeah, but they're like perfect fits for each thing that they're doing.
Exactly. And that's something.
That's the profile.
That's the profile. Like, so I'm not a big believer of, I think there was a time when, and maybe this was because like there was a time when like a lot of marketplace companies were founded, right? And so maybe there were like a very specific archetypes, like where VCs would be like, I want to find like the next Adam Newman and the next Travis Kalanick of the world, and those were very specific archetypes for what they were trying to do. But now it's like I think more about the founder's kind of personality, their orientation for what they're trying to build, and just making sure there's like a match there.
Yeah, that's great. That's it. We're done. This was fantastic. Yeah, thank you for coming in.
Thanks for being such a great partner to J2.
Yeah, of course. We love you guys.